We all think that explosive growth is the dream, right? That hockey stick chart is what every founder wants to see. But what if that incredible success is actually a trap? Turns out, growing too fast is one of the biggest reasons companies don't just stumble, they completely fall apart.
Yeah, this quote just nails the mindset, especially in the startup scene. Scaling up really, really fast is seen as the ultimate win. It's supposed to be proof that you're grabbing market share, you're dazzling investors, and you're just crushing the competition. It's become the main way people measure success. So that brings us to this huge paradox we're going to unpack. How can the very thing that everyone is chasing be the same thing that can completely destroy a company from the inside out? Let's get into it. Okay, so let's dive in. The very first crack that usually appears when a company's growing like crazy, it almost always has to do with money. Specifically, the actual cash you need to keep the lights on day to day.
And you know what? There's actually a name for this. It's called overtrading. It's this wild situation where a business becomes so successful at selling its stuff that it literally can't afford to keep up. It sounds totally backwards, I know, but it's a classic trap.
So let's trace this cycle, because this is where it all goes wrong. First, demand just explodes. Sales go through the roof. Sounds great, right? Well, to meet all those new orders, you have to spend money right now. Cash flows out for more staff, more materials, more inventory, but you have to wait to get paid by your customers. That could be 30, 60, even 90 days. And that gap, that chasm between the money going out and the money coming in, that's the cash crunch that can bring a booming business to a screeching halt. And listen, this isn't some rare thing that only happens to a few unlucky companies. 22%. Just think about that. Nearly 1 out of every 4 small businesses in the US is dealing with this. On paper, they look like they're killing it. Sales are amazing. But behind the scenes, they're scraping by, trying to pay their own bills because all their cash is tied up, just waiting to come back.
So, as you can imagine, this financial pressure, it doesn't just stay in the bank account. It kicks off a chain reaction, like a line of dominoes toppling over, and it starts to wreck a company's day-to-day operations. Once the cash gets tight, the whole machine starts to sputter.
It usually starts with the internal processes. The systems that worked just fine for 100 customers are completely swamped when you suddenly have 1,000. So teams start improvising, they start cutting corners, anything to just get the work done. And what happens next is inevitable. Quality drops. And right on the heels of that, you guessed it, customer complaints start pouring in. And this quote, it just perfectly paints the picture of what that chaos actually feels like day to day. It's not always some big, spectacular explosion. It's the simple but absolutely critical things that start to fall through the cracks. A phone rings and there's no one to pick it up. A potential customer's email just sits there, unanswered for days. These are the tiny little cuts that slowly bleed away all the trust you've built.
We have to talk about Theranos, right? It's probably the most infamous example of this in recent memory. They focused everything on the appearance of growth. They signed these massive deals with Walgreens and Safeway to get their machines in front of everyone. The only problem? The tech didn't work. They built this gigantic operational monster on a foundation that was pure fantasy. And we all know how that ended.
And of course, this kind of relentless pressure doesn't just break systems. It breaks people. The employees, the ones who are desperately trying to hold everything together, they're often the first real casualties in this whole mess. Just look at this chart. It tells a story we've seen time and time again. You see that workload bar spiking way up? Now look at what happens to morale. It just plummets. It's a textbook inverse relationship. People get overworked, they're stressed out, they're completely burned out, and that leads to a revolving door of employees, as your best people leave to find someplace sane to work. All of this starts to eat away at the company's soul, that special culture, that thing that made the business great in the first place. In the mad rush to hire more bodies, there's no time to bring people in properly. So that shared vision starts to get diluted, and sometimes it disappears completely. So you've got this domino effect of money problems, operations failing, and people burning out. And where does it all end up? Right at the top. The leadership team, the people who are supposed to be steering the ship, get sucked right down into the daily chaos. This is a really telling comparison. Before all the frantic growth, leaders are focused on the future. They're thinking about strategy, innovation, building a great culture. But once that out-of-control growth hits, their focus flips entirely. They become reactive firefighters, just spending all day, every day, putting out fires, dealing with complaints, and trying to clear backlogs.
And this quote just hits the nail on the head. Those constant, I need it yesterday demands force leaders to completely abandon the long-term thinking. The very thing that made the companies successful to begin with. At this point, they're not really leading anymore. They're just reacting to survive the day.
Let's look at another big one, Solar City. They were pioneers, right? They had this amazing vision for solar energy. So they went on this hyper-aggressive expansion, opening up in new markets at a dizzying pace. But it just burned through unbelievable amounts of cash, and it led them right off a cliff into a liquidity crisis. They ended up having to be bought by Tesla in what many called a bailout, and they lost their independence.
So when you boil it all down, it really comes to this. Chasing growth at all costs means you often ignore the most important thing. How strong is your foundation? Real, sustainable success, it's not measured by how fast you climb. It's measured by whether you've built a business that's financially, operationally, and culturally resilient enough to actually handle that success when it shows up.